You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SOVO. The Option Block is brought to you by SOVO. SOVO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cbo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in these crazy markets? Well, I guess let's find out together, shall we? Because it is time for episode 2 of your bi-weekly options extravaganza, known hither and yon as the Option Block. My name, of course, Mark Longo from the TAG. Don't forget the Options Insider.com. Of course, while you're there, check out great shows, check out all the great content, unusual activity, most actives going up multiple times a day. You folks love that. Can't get enough of that. All sorts of other fun. If you like any of that stuff, feel free to leave a rating, a comment, a like, a star on whatever platform you get our content on. Always helpful at the end of the day. It helps new people continue to discover the content, which these days, it's hard to argue there aren't more people coming in just literally every day. Look at these markets we're all living. Just look at NVIDIA Week recently. How many people did that drive to the world of options and volatility? Help them find a path to quality content. Leave a rating, a star, a review. And also, if you like what we talk about here and what our sponsors have to offer you guys, feel free to use them. And then, of course, let them know, hey, you know what? We heard you on the old Options Insider Radio Network. Just wanted to let you know they love that. They go bonkers for that. And then it helps them support the network. So it's a great virtuous circle that we all live on at the end of the day. So leave a rating and star review if you can. And if you like anything you hear on the network, you want to try it out, and you try it out and you like it, let them know. that goes a long way as well. And of course, if you want to go above and beyond, you want to join us after Vol Views for a little bit of options oddities, you want to join us earlier this week for a great pro Q&A session and all sorts of fun. Only one place to go. theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on this very special Leap Day Extravaganza episode of the Option Block. And I thought about it, listeners, and I said, you know what? What would make this a very special once every 4 years episode of the Option Block? And what have people been asking for? What do people really want at the end of the day? And you know, it all comes back to one thing. They want more Uncle Mike in their lives. So we decided to grant that wish one time only every 4 years on Leap Day. I kicked the Flow Master to the curb. I said, get the heck out of here. I kicked that pit crew to the curb. I said, go off to Baltimore. I said, it is Uncle Mike's time to shine because, yes, listeners, it is going to be 1 hour of raw, unadulterated, in-your-face Uncle Mike goodness with none other than Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome to your own Leap Day Extravaganza, sir. How you doing?
I mean, I'm excited because I know now that based on what you said, I want in on this for 2028 and 2032.
I will mark the calendar there now. It's done. The producers have already marked it. Leap Day Uncle Mike Extravaganza. It is on the calendar. Are you ready, listeners? Because it's time for an all Uncle Mike trading block. Here we go.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's do it. Let's commence operations on this all Uncle Mike all the time, and we'll get to him in a second. I promise you. First, let's set the stage out here on the old trading block. Of course, the portion of the show where we break down what the heck is trading out there for all of you newcomers, and indeed, there are newcomers all the time out there. A little bit of mixed PCE action. Of course, everyone and their mother just obsessed with inflation, as we know, every new measure. And this is supposedly, from those in the know, the Fed's preferred measure of inflation. And this one coming in a little hot, but maybe not as hot as the street expected. So getting some mixed results from that coming into the start of the show. The Dow is off almost 0.1%, about 0.07%. S&P, it's a day that ends in Y's. That means the S&P has to be up. It's up about 1/3%. It was higher earlier in the session, got about 50.95, so almost 5,100. Then they took it back down to about 50.66, and it's bounced off that now back to about 50.85 or so. So we've already had a little bit of whipsaw action out there right now, netting out to about 1/3% to the upside. And the NASDAQ saying, you know what? It's our day to shine, up about 0.6%. 2x the S&P, saying, S&P, hold my bear, kid. All this activity means our vol products are mostly taking a break today. VIX at about 13.5 when we kicked off the show, down about 1/3 of a point. VVIX, so the vol of vol itself, listeners, back down to a 79. That's down about 2 points. So you know, I've said it before. Historically, when it starts getting into the mid-70s, around a 75, that's when we usually can expect VIX to do one of two things. It's going to languish there for a while, or more likely, it's probably going to bounce again. Something's going to happen to juice up vol of vol a little bit. Of course, the 2017 could come around and vol could just die. That could happen too. But usually, if past is prologue, we get down to around a 75. We tend not to hang out there for very long. So we'll keep an eye on that if VVIX gets much lower. A VXX 13.75, literally unshed when we kicked off the show. UVXY back below a 7 handle, 680, down about 0.2 point from last show. SVIX 41. So the word is out that the once and future Dr. VIX is out of SVIX. He's dumped his holdings, and so it rallies up to a 41, up about 1/3 point. And UVIX kind of flirting with unched at about a 10 even when we kicked off the show, down about 0.1 point. This is normally the part of the show where I go out to the shores of Maine or to the Southern Volatility Mecca and then out to SIBO East. We're not doing any of that today, listeners. It is the Leap Day Extravaganza, so we're only going to one place, and one place only. That is to St. Charles. Mr. Uncle Mike, the entire trading block is yours, sir. Do with it what you will. Have fun.
Well, I think I'm going to use this time to discuss Civil War history. Four score. No,
All right. Kidding. I'm here for it. Strap in. Let's go.
For sure. So we haven't really been doing much since the big move that we had like a week and a half ago with the markets. So in other words, we had the big move up on, let me see what day that was, on February 22nd. So from there, for the last week, we really have not done much in that we closed February 22nd at 50.87 in the S&P, and then we're trading in the 50.80s again right now. We got a little bit higher last Friday, but for the most part, it's been kind of a boring week. So not a lot's happening right now. And so where we are is we're very flat, but we're flat at high levels. So from a technical standpoint, that could be good. It could be bad. It could be bad in that, and by bad, of course, for us bulls, I don't cater to the bears out there by any means. If you're a bear, then you're just not my type of person. But if you're a bull, it could be good from the standpoint that the market could be kind of gathering itself, taking a little bit of a breather, and it didn't just go up, hit the big number, and then go right back down. It didn't just hit 5,000 and go back down. We actually broke the 5,000 mark all the way back on, let's see, the first day that we actually hit 5,000 was on February 8th. So we've been at 5,000, or we've broken that barrier, so to speak, since February 8th. And so we've had that mark, and then we had the big update a little over a week ago, actually. And so from there, 5,000 has kind of established itself as a new potential key number level of support, in that if it does go down to the 5,000 level, there's reason to believe that it could go back up. We've been here for at least 3 weeks. Maybe this is another stepping stone to a greater bull market on the road to 6,000. Who knows? Now, the bear case for this would be along the lines of, and once again, I don't cater to such people. I mean, bears, come on, bears, what are you thinking? Good gosh. But the bear case for this would be along the lines of, hey, you're at 5,000. What's the deal with this? And it's a little, don't you think this is a little bit ridiculous, you guys being this high right now? I mean, this is way up there. But when it is way up here like this, you kind of, there is a such thing as gravity. And if we're going up too high, too fast, then it could lead to something a little bit more painful on the way down. The other part of this is that I'll put on my bull and bear cap for a second. We've had such a rally recently. And by recently, I'm just talking about since, November, that markets that go up really fast have pullbacks really fast. So to give you a little bit of perspective on this, the most recent low of this market that I'm referring to, if you look at October, we were at 4103 in October. And we've actually already had a 1,000 point move since October. That's a big deal. That's a very big deal from the standpoint that when you move that quickly, you could be in for a pullback. Combine that with 5,000 being kind of a key mark that, yeah, we're over it, but maybe we're not going to go that much further. We could be in for a pullback. So there's two cases right now for where this market could go. Now, thankfully, I'm an option trader, so I can prepare for both of them. That's the exciting part of markets like this. How are we doing that? Well, a couple things is that the covered call portfolio, when you get market flatness like this, it does benefit from the standpoint that you're eking out a little bit of time decay. That is very helpful for having exposure to short premium. We've talked about the benefits of covered calls. I don't even know how many times on this show for a variety of things. It can help with sequence of return risk for retirement income. It can help to catch up to the market. Even if you're a little bit behind the market from covered calls, if you get a few weeks or a few months, depending on your time frames of flat markets, it can be of benefit. If we do go back down, then maybe you left your covered calls in the money a little bit. that can help you from the standpoint that you didn't really miss out on the rally. So I mean, like, to give you an idea of it, don't get me wrong, we have losing stocks too. I'm just telling you about one of the winners, is that we've been doing covered calls on Apple we've been doing covered calls on Apple for a long, long time, but one of the stocks with which we use is Apple. And so from Apple, if you look at it, the 180 mark has been kind of a magnet for Apple. And I'm going back to June. So if you look at June, when it first broke the 180 level, I'd have to look, but I don't think we've sold any juice above the 180 level since June. If we have, it has not. I think maybe we did a couple of 185s for maybe a couple of months. I'm not sure, but I know that we've been pretty close to the 180 level. Now, let's say that all you're going to do is just sit on Apple between June and right now. Well, you're right back to where you started. However, in a covered call market, the benefit of the covered call would be that we've been selling juice this whole time. We've gone deep in the money. We've gone out of the money. We've been around I'm pretty confident, I don't want my compliance people killing me on this one, but I'm pretty confident that we have not gone over 180 with any of our covered calls, depending on the timing. But if we have, I'd be shocked if we went above the 185 level. So I can say with 90% certainty, we have not gone over the 180 level on Apple covered calls since June. But there are times to where, if you look at in December, when it's touching or right near the 200 mark, not feeling so good about ourselves at that time. Good gosh, we got maybe $5 of upside in the calls, but we missed out on the other $15 of it going up to the 200. But then it came back for us, and then it's kind of just been channeling and puttering around ever since. This last 6-month period, we've been cashing in on premium, and we're definitely ahead of the game for the last 6 months. Now, of course, the downside to doing things like this, if you look at the first half of the year, we've had to roll up, we've had to do call spreads, we've had to do a variety of things between 185 and 125 and 180. But you got to take the good with the bad, and that's covered call trading. So in markets like this, how do you handle it when you're at a very uncertain point in the short term, like I believe we are? Covered calls can be a great staple to have. Now, if you're coming to the party late, well, covered calls may or may not be the right thing for you. What I mean by that is that it may be you may have missed some flat markets for covered call trading. But let's say that you want to become a covered call convert with some of your stocks that are at all-time highs. Well, that's fine, because you've actually ridden the wave up, and maybe you want to sell some premium on it. So it is a way with which you can use it as a tool for situations like this. Now, let's say that you're really concerned about the stock having a little bit of a pullback, but you think the stock could go higher. Well, by all means, you can buy a put spread. There's stocks that we have right now in our portfolio, or in at least some of the clients with which I'm trading, to where stocks have hit all-time highs, and we've talked about it. And so we have put spreads in place. The premium is too high for us to want to buy a put option straight out. So we just buy a put spread. So by doing that, we actually have the ability to have some protection to the downside. I mean, after all, this is a stock we really like, let's say, but it could get a little bit long in the tooth. It could kind of have a little bit of a pullback. We want to be cautious of that. Well, a put spread can be a wonderful thing. Now, this isn't one of our core holdings. This is just kind of a one-off for a specific client, but IBM. IBM has had a really good run higher. And so from there, what we decided to do is we actually bought a 180, 170 put spread, in that we still want to hold IBM, but what we want to do with it is we want to have some type of protection in place in case it actually fills that giant gap with which it went higher. Now, IBM is a core holding for this one client, and we don't want to be called away on it, so we're not looking to sell a covered call on it, but it could come back, and the selling can happen in stocks. It does actually happen. I know it's hard to believe, but it can happen. And if it does, we have something in place over the course of the next couple months to where we're protected from it. And we have a plan in case it pulls back. Now, are there other stocks to where we're just letting it ride? Because if it'll pull back, we don't want to mess with it because we're having a holding period for a long period of time and we can handle the ups and the downs. Good gosh, yes, there's stocks like that. Personally, I mean, I love Apple, Amazon, Google, and stocks like that as core holdings. I love Apple as both a covered call stock and a core holding. But those are stocks to where even if we have a big pullback, I'm fine riding out the ups and downs of it because over time they're fine. And so my view right now of this market in terms of where we're at, it's both uncertain, but it's exciting at the same time. Because let's say we do pull back a little bit. Well, those plans that I had that I just talked about, and these were just 2 samples with IBM and Apple. There's plenty more, and with Google and Amazon and Apple and some of our other core holdings, those are just a few examples. We're planned and we're ready for whatever things that could happen at this uncertain point. As an option trader, you need to have this view on every trade that you make based upon the underlying. What if the stock goes up? What if the stock goes down? What if the stock stays the same? What is your plan? Now, if you're holding the stock and you're fine with it going down for a certain time frame, great. My plan is to do nothing. I'm just going to sit on it forever. Nothing wrong with that. But if you want to take some profits, take a few things off the table that you think could help you, it's important to have a plan in a certain situation like that. There's other areas in some of our smaller SPY holdings or that I have for some clients to where we have a pseudo SPY risk reversal going for the next 6 months. And so what we did there is the last couple of weeks or a week ago when we had that run up, I sold some 516 calls and for 1 week out. And I was thinking to myself, if we get this much of a run this quickly, that is a loss that I will gladly take on the 516 calls. If the market keeps going up that quickly, that fast, I'd be happy to take that loss, quite frankly. It didn't, and we were able to take advantage of some time decay. So, moral to the story, uncertain times, they're uncertain and they're not fun, but if you're prepared for them and you're prepared for any outcome, then it can really be exciting and a lot of fun. So when I said I was excited today, I wasn't lying.
You were not lying indeed, sir. Making full use of this Uncle Mike extravaganza we have gifted before us, sir. So yes, hope you're enjoying your Uncle Mike extravaganza. Don't worry. More Uncle Mike to come, listeners. So if you didn't get enough just now, there's a whole heck of a lot more to come. Before we get there, let's give him a little bit of a break, shall we? As we roll on out to see what's going on in the rest of these markets. And again, it's one of those days, listeners, where it kind of depends where you're hanging your hat, what kind of day you're having out there. Is it a banger day on the broad indices? Well, if you're looking at VIX, you might be forgiven for thinking today was the day that the market forgot to open, because there is not a heck of a lot of anything going on. It's 152,000 contracts on the tape today. That's it. Usually by this time of day, we've seen that just in some spreads that have gone up. The 1x5 when it goes up does usually that much or more paper sometimes. So there is a whole heck of a lot of nothing. The biggest trade, the March 12 half puts. Paper bought 11,253 this morning of those for 14 cents, expiring on the 20th. So these are the regular Marches here. And 14 cents, you like that? 12 and a half? I mean, I've got some March downside in my back pocket still in VIX. I wouldn't be angry if that 12 half strike came into play. Seems like maybe we'll threaten it, not threaten that, but we'll threaten more downside out there in VIX land today. But I don't know, 12 and a half puts, that's a bit of a ways to go. You think we can get there, listeners? Either way, that's about it. What's going on in VIX today? Unless you like 4,000 of the May 17 calls for $1.62 being legged in. Looks like a 17.28 vertical against the 13 puts going up 4,000 times each. There really is nothing going on out there today. The ADV 714, that kind of reflects the whole heck of a lot of nothing that's been going on out there. SPY, a little bit of a different story, looking kind of where we expected, actually a little bit more than we might expect right now. So again, weird days when we have the VIX doing almost literally nothing and SPY looking pretty robust. 4.62 million. That's on the upper band of what we would expect on this time of day We usually expect SPY to be around 4.3 to 4.5 this time of day. So 4.62, certainly exceeding that. The ADV is about 8.45 million. Is the S following suit? The answer is yes, it is. The S almost 1.75, about 1.72 million when we kicked off the show out there today. So intriguing stuff out there. The ADV 3.16 million in the S, and of course the ADV in SPY looking pretty robust at a good booming 8.45 million. By the way, is that time of day, listen, we haven't done it in a little bit. Should we check on how many of today's top 20 are expiring today? If you go into the S, the answer is all of them. Once again, it is all 0 day all the time in the SPX. It is just fascinating. You see how much this product has been transformed. By the way, if you're wondering what the most active contract is out there today, 0 day or just overall in the S, because they're one and the same, it is the 5100 call expiring today. So we kind of threatened that earlier today. Can we get there today? Well, 67,068 contracts say maybe we can, or maybe they're overriding it. Either way, that's the contract du jour out there today, followed by number 2, 47,000 of the 50 half puts also expiring today. So a nice 50-point range there. Strangle, risk reversal, call it what you will out there, but that's what we got lighting it up out there in the S. You know, we don't run that same analysis very often in other indices, but let's try it in SPY. Let's just see if SPY is following that same trajectory of all 0 day all the time. And the answer is no. A fully 6 of the top 20 most active contracts in SPY today are not expiring today. Now that means 14 are, so it is still very 0 day heavy, but it's not all 0 day all the time. If you're wondering, by the way, the most active contract in SPY today, 317,000 of the 508 calls, so the 5080 calls in the S, if we were to translate that, expiring today. 317,000 of those. Those are slightly in the money right now. So again, playing that 0 day close to the fire game. Small caps, IWM, 760,000 contracts on the tape right now. The ADV, 1.38 million. So small caps actually looking fairly robust today as well. And our old friend NASDAQ, man, they are hot out of the gate today. Usually this time of the show, 2.2 million or so. We expect the rest of it to slowly come in over time. Nope. 2.94, almost 3 million contracts already in the NASDAQ. The ADV, 3.66 million out there. You know what? I don't think we've ever run our 0 day analysis in the Qs before, but of course they have them. So let's do them today. What better way to celebrate Leap Day than a little bit of 0 day analysis across the board, shall we? And the answer is it all 20 for 20? 0 day in the Qs? The answer is no. 7 of your top 20 are not expiring today. Again, flip side of that, 13 of them are. So glass half full, glass half empty. Read into that however you like. Interestingly, though, the most active contract out there today looks like it's a put roll. 185,000 of the DEES 390 puts. We're at about a 438 in the Qs right now. So 390, a bit of a ways out of the money. Looks like they're rolling those out and up from 185,000 of the SEP 379.78. That's a hell of a strike. Puts out there. So already rolling your SEP up to DEES. I get it, though. You want to take advantage of a little bit tighter protection. That makes some sense. But still, you're dominating your tape out there in the Qs. Then you get to 148,000 of the 437 puts for number 3. That is obviously a 0 day contract, and that is a little bit closer to the fire. So that's your 0 day rundown for the day out there, listeners. Now let's get out into what we typically talk about out here this time of the show. I wanted to hold on to it a little bit because I like to give it time to percolate. If we run this calculation too soon in the show, it can give us a misleading number for how many contracts it costs to break into the top 10. And never let it be said that I want to mislead our dear listeners here on the show. If I run it right now, there we go. That gives us a better number. Usually around 12:30 is when I like to run this. And that gets us to 267,000 contracts to break into our top 10, which again is respectable. That's not 150, but it's not 350 either. It's kind of right in the little bit of the upper band of the middle there. And that gets us to our old friend. And that is everyone's favorite Palantir, if it'll come up on my screen. There it goes. 24 3/4, up about a third of a buck today. Good for 267,000 contracts. Palantir, name a lot of people have added to their portfolio, certainly since their earnings, where they blew away from the 7.5 handle I think they were talking about. So they're closing in on 4x that. had a nice run. A lot of them use them as a cheaper, just net outlay play for a little bit of a swing at the bat of AI. Then right behind him at number 8, the artist formerly known as Facebook. Yeah, it's Meta. 299,000 contracts on the tape for them today. 488 even, up exactly $4 today for good old Meta. So I guess this is one of the many reasons why our friend the NASDAQ is on the rampage to the upside today. Number 8, the newest member of the Dow family. Does this make the Dow sexier? Dare I say it, more relevant to you now that they've added Amazon? That's, spoiler alert, Amazon number 8. 301,000 contracts on the tape. Doesn't seem to be doing wonders for the Dow. The Dow was still kind of red coming into start of the show. 175, pretty much even, up about $1.88 for Amazon, and the number 8 spot at 301,000 contracts. Number 7, we haven't talked about this one in quite some time. How many firms would love to have this ticker right now, listeners? Yeah, it's C3.ai. We talked about them before, trading $37 today, up 7 1/3, or about 25%. Ticker symbol AI. I think people would pay a large amount of money for that ticker right now. So they're popping hard today. I'm not sure. Maybe NVIDIA has a stake in them as well. Not sure what's driving it. Just the fact that their ticker is AI. They had earnings today. There we go. I'm not surprised they haven't popped harder than that, but there we go. AI. That's funny. Number 7, 314,000. Number 6. This was a hot IPO for a while. Is it hot again? I guess, no. The answer is most decidedly not today. They are coming for this today. This is Snowflake, 455. That's how much paper they have on the tape right now for number 6. 186 1/4 off $43.75, or about exactly 19%. So clearly those earnings, no bueno. They were just hot on one of their last earnings announcements too. Wow. So, man, the worm has turned out there in Snowflake. My goodness. Are you folks slinging Snowflake? 455,000 contracts says yes, listeners. As we keep on rolling to number 5, is this the new paradigm? Is this what we should expect going forward? Is Apple making it maybe barely into our top 5 like it did today? Usually sometimes coming in lower. Now Apple, number 5, a respectable 702,000 contracts. Apple, 180 1/4, off about $1.25. A lot being made about their abandonment of their electric car project. They had about 2,000 people working on it for nearly a decade. So Apple just kind of giving the old heave-ho to that. What does that mean for EVs as a whole, for the prospects for that market? A lot of people debating that right now. Apple selling off a little bit. Again, kind of just throwing to the curb our notion that a day that Apple is red, the S&P has to be red. That seems to be maybe behind us. Dare I say it? We shall see. Number 4, this one, you don't have to listen to the Crypto Rundown listeners to be all in on this one. This is America. 824,000. Man, this thing is all over the freaking place. Yesterday it was threatening 30. Today, 26.19, off $4.84, or 15.6%. If you want vol, I think when we checked on Monday, this was trading at about 141 volatility. If you want volume, this thing puts up 600 some odd thousand contracts a day. I mean, Mara is threatening VIX right now in terms of volume. It's crazy. 824 on the tape today. I mean, this thing just all over the place. It's hard to come to grips with it, really. But if you want an action-packed trading name, it is hard to look beyond Mara. Unless you want to look to our number 3 name. Yes, all the way down at number 3 today. That's kind of surprising. It's NVIDIA. A paltry, a meager 840,000 contracts. It's only up 16 handles, or 2%. Well, what's that to NVIDIA these days? 792 3/4 for NVIDIA, 840,000 contracts on the tape. What's more interesting is the top of our list. Number 2, yes, I said number 2, it's Tesla. 1.29 million. When's the last time I said that? Listen, when's the last time anything took a beating to Tesla out there? 200 1/4, off about $1.75. So they're managing to still hold that 200. Looks like they broke it briefly earlier this morning, but now have rallied back above it. 1.29 million. That's usually enough for number 1. But man, I already said NVIDIA. Tesla number 2. What the hell could possibly be beating Tesla out there? You might be saying to yourself, well, the answer, AMD. 189 3/4, up 13 1/4. My goodness, this thing is a banger today, up 7.5% and 1.36 million. Yes, with an M, contracts on the tape. So AMD going from kind of a sleepy also ran last year to all of a sudden banger, kicking Tesla and NVIDIA to the curb. My goodness. That is no mean feat out there, listeners. But let's keep an eye on what else is popping off this week. Luckily for you folks, because it's the Uncle Mike Leap Day Extravaganza, another way to celebrate is with some hot off the presses earnings action. Yes, we got that for you in our hot little hands, courtesy of our friends over there in Orat's Land. I already mentioned Snowflake. Man, they are just blowing the doors off. They were this morning, they were trading 230 going into their announcement. They were pricing in only 10.8%, listeners. I already told you they are dramatically outperforming that. When we ran this report, they had already gotten about 20% to the dark side, so pretty much 2x their straddle. They bounced off that a little bit now, down 19%, but still, Snowflake, just a banger report in the wrong direction. So Leap Day, kind of going to be a forgettable day, seems like, for our friends out there in Snowflake. Let's go out to a pizza, Papa John's. They were before the bell today as well. They went into their announcement, $70.15. They were pricing in 6.7%. You know what? They delivered 7.7%. They were at 75.5 when we ran this report earlier this morning. Now they're at 74.40. They've given up some of that. They're up about 4.25, which puts them about 6.06%, which puts them a little bit underperforming their straddle, actually, which is kind of interesting. So luckily for you folks, we have a lot of names popping off. Man, the earnings move results report alone is pretty big today, listeners. We don't usually see it this large. Again, we love a good dose of earnings season. Let's go out to our old friend Pags, a.k.a. Pags Seguro. You know them. Brazilian fintech. Talk about them on Oddities a lot, listeners. Yesterday after the bell, they were at $13.83 going into their announcement. They were pricing in 7.3%. They delivered 4%. And they're actually, right now, they're almost unched, up about 0.5%. So, and talk about earnings underperformers. If you sold some premium out here, you are looking pretty good out here in everyone's favorite Pags, listeners. So, wow, no love for Pags out there today. And there are a ton of names popping off today before the bell. Let's go to a name we don't talk about a lot. This is everyone's favorite, perhaps least favorite if you ever use their software. Certainly, I'm not a fan. This is Salesforce. It looks like a glorified spreadsheet from 1997. Their UI could use a dramatic overhaul, but hey, that's my 2 cents out here. They were yesterday after the bell as well. Nearly $300, $299.77 when they went into their announcement. They're pricing in 7.5%, and they also dramatically underperformed. They delivered 1.5%. They were at 304 and about a third when we ran the support. They're at 305.64 right now, up about 2%. So they have added a little bit onto the top out there, but still looks like an underwhelming from a vol perspective, but they're having a nice little upside pop. So I guess the market, for the most part, liked what they had to say. Coming up after the bell today, we've got Dell. They were at 93.25 when we ran these numbers. They were pricing in $7.79. In the past, they moved $6.50. So Dell pricing in extra juice. That's kind of interesting out there. Dell, how sexy of a name is Dell? We joked about it when we talked about it on Oddities recently. I think the Rock Lobster said, are they going to go private for the 5th time? That's kind of the question you ask whenever you see these kinds of numbers out of Dell. Everyone's favorite GGAL, we talked about them before too, aka Grupo Financiero Galicia SA, $21.89 right now. They were at $21.74 this morning. Their earnings are the 4th before the bell. They're pricing in $1.56. In the past, they moved 41 cents. So that's over 3x what they're pricing in. My goodness, what are they expecting out there? Target, the 5th, 151.44 is where they were trading. They're pricing in $9.16. In the past, they've moved about $12. So nearly $3 off the top in Target as well. Is the vol gone? Is the bloom off the rose in retail? Well, I guess we'll have to wait and find out. Man, there's a ton more. We could spend the rest of the show doing this, but we got to get to a little bit of earnings oddness, or I should say just general oddness. By the way, the season right now hanging out at 124%. So this season, also a banger, 813 names reporting. That is 20% above our long-term average, which is already frothy at 104%. So my goodness, looking pretty hot, looking pretty frothy. Let's see if we can keep it up with an Uncle Mike special edition of the Odd Block. Here we go.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
right, everybody, let's get to it. Uncle Mike, you ready to talk some oddities, sir?
Let's do this.
By the way, our chat is liking this. They're saying, because it's an Uncle Mike festival, they said they assume this is a buy crypto and only trade long straddles episode. Make money in any market, you can't lose. So that's what we should talk about. Crypto and long straddles.
Absolutely.
I don't remember you hating long straddles. I know, obviously, the crypto hate. The long straddle, I don't remember you hating long straddles. If you want to talk stupids, that's a whole other conversation we can get into on the Uncle Mike. It's your show at the end of the day. You're driving the bus. I'm just here guiding the steering wheel a little bit, sir.
There you go.
All right.
Whatever we want to do, we'll talk about
We'll do it all today, listeners. How about a funky collar, maybe, Mr. Uncle Mike? Ratio collar. Let's get into it. I was just talking about this name. This is good old GGAL, a.k.a. Grupo Financiero. What happened? My screen just lost it all on me. Where is it? There we go. Yes, our old friend GGAL, Grupo Financiero Galicia S.A., Brazilian fintech name. Talked about him quite a few times on Oddities, probably once or twice here as well. Trading $21.89, up about 15 cents. They obviously just had their announcement. We just talked about that in the earnings results. Let's look at their results for the year. They've had a good year. A year ago, it was $13.42, so they're up over about $8.50. 63% on the year. I think most people would take that. That's pretty good. That's a banger. It's outpacing the NASDAQ last year. They crushed it right away, though, in all the contagion fears, down to the low for the year of 10.02 in March. So if you look at it from the March lows, it has more than doubled. It's up to 21.88 right now. So it's had a nice run. Even though they crushed it, they rallied it in August, about $18, and they crushed it again. And right around Halloween, it was 11.21. It was still up about, actually, net on the year, it was down at that point. It was opened the year at 13.42, so it was down about 2.40 at that point, 2.20. So then from October, it has rallied from 11.21 up to where it is right now. So almost doubling from there as well. So just quite the rampage here for GGAL. And it seems like, Mr. Uncle Mike, maybe some people want to keep that money. Because it looks like someone came in this morning and bought 15,500 of the April 17 half puts. So stopping themselves out a little over $4 below where we're trading right now, about $4.30. So they're going to give up some of that upside with this trade. They paid 37 cents for these bad boys. The stock was a little bit higher, actually a lot higher, $22.68. So if the Rock Lobster was here, he'd say they're passing the first sniff test, which is the stock is moving their way, and they bought some puts. They also, well, I shouldn't say they, but it looks like a duck and it quacks like a duck, Uncle Mike. They didn't go up spread. They didn't go up together. They actually went up about 5 minutes apart. But if you look at it, 8,000 or 79.99 to be precise of the July 35 calls went up again about 5 minutes later, and those went up. Paper hitting the bid for those 67 cents on those about 8,000 times. So again, it's a funky market. It was 55 cents at 95. So I'll have to dig in to make sure. First blush, it looks like they're selling them, but that's a pretty crazy wide market. They could have bought them, in which case that would be a funky ratio time strangle. But it looks like, given the fact that they did, if it is the same person, they did roughly 2x the puts, and the calls are roughly 2x the cost of the puts. You could see selling 8,000 of the July 35 to 67 cents against buying 15,500 of the April 17 half puts for 37 cents. You know, it kind of, if it looks like a duck and it quacks like a duck, chances are it's probably a duck. So Uncle Mike, this didn't go up as spread, didn't go up together, but they kind of look like eerily reminiscent trades. What do you think? You think this is the old collar? Do you think they were actually buying those calls? You think it's completely unrelated? What does the Uncle Mike spidey sense tell you?
It sounds like a collar to me. I mean, excuse me. The collar is one of, it's a great go-to when you're trying to protect profits and you just don't have the mental or intestinal fortitude to sell because you think it's going to go higher, but it scares you to death because you don't want to feel like an idiot for letting the stock go higher and then not getting out. But you just can't do it. So a collar is a great way to preserve your mental health in that situation, I would say.
I was just looking here, and after that big print went up in the July calls, the market did tighten up. I'm trying to see if it was anything closer to, 55 at 95 still. Then later on, it was 60 at 75. This was about almost an hour later. So they tightened it up 15 cents wide, but that doesn't help us with that. So yeah, looks like they probably, otherwise why do it on that ratio? But it looks like they probably sold those. That makes the most sense. And of course, I'm sure they'd be more than happy to let some stock go at 35. Why are you buying the 35s, right? So yeah, I think they sold that. They bought the puts to hedge. They got themselves a little bit closer hedge, a little bit longer term upside sale. And they're happy campers letting a whole bunch of stock go at 35. I think I would be as well. Let's keep on rolling into some more paper we saw today. Let's go out to, this is a newcomer, I believe. This is SOVO. This is ticker symbol SOVO, SOVO. This is for SOVO Brands Inc. Looks like they own a bunch of food processing lines. Trading 2280 today, kind of unched today. Let's see what's going on the, they've had a good year. 1320 a year ago, and they shot up to about 1770 last August. From February to August, they went from about 1320 to 17.75. They had a good run there. Then they went straight up to about $22.50 on August 7th. So this looks like a takeover chart, but I just see they had a good earnings announcement back in August. I don't see any takeover because the stock has barely budged since then. So that's usually the kind of chart that's indicative of some sort of corporate action. Someone comes in and that's the takeover price, and that's why the stock doesn't move. The stock was at 22.5 after that takeover or whatever that was in August, that earnings announcement. It's 22.78 right now. It has barely budged. So I don't see any corporate action out here, but that chart looks very much like one. Mr. Uncle Mike, someone came out today, and I guess they decided this chart is not indicative of the future because they came in and scooped 3,000 of the Jan 25s. They paid 30 cents for these bad boys, lifting the offer. Because it's not the most volatile name, this is only in about a 12 volatility. They did have earnings just today, so the earnings, I guess, are not blowing anybody's skirt up today, but I don't know. This stock seems glued around 22.5 for the better part of the last 6 months. I don't know if the 25 strike by Jan is in the cards. What do you think? Are you a big fan of these, Uncle Mike?
No, because you had me, or I should say you didn't have me when you said takeover chart, and I think it's just a roll of the dice, honestly. So can't say I'm a big fan, quite honestly.
Yeah, that's asking for a lot from SOVO Brands. We've seen a can pop last August on something, apparently earnings, but then since then it has literally done nothing. So I don't know. 25 by Jan. Maybe you like these listeners, head on in, but I'm not rushing in. Instead, I'm keeping the party rolling on this Uncle Mike Palooza right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. By the way, we are coming up against it, but if you folks in the live have any special questions or comments you want to put towards Uncle Mike on this special Uncle Mike Palooza, get them in quick. Let's go through now with some of our fun questions of the week. We already paid off the NVIDIA one earlier this week. Got a fun couple going on right now. First off, the one we talked about on Monday with NVIDIA in the rearview mirror. What is the next big market event that is driving your trading? Gave you 4 choices. Of course, if you don't see yours, send in yours. The next Fed meeting, the next earnings season, not much until the election or the next CPI number. Uncle Mike, what are you hanging on in terms of your trading? What's your next big thing you're watching? And B, what do you think our audience is fixated on?
I mean, with the audience, I think they're going to say the election, quite honestly. I'm sorry. I meant to say the audience is going to say the next Fed meeting. I would say it is the next Fed meeting, but I don't think it's going to be the next Fed meeting. I'm kind of saying that by default. I think that right now, I don't know if there is one per se. So I'll say audience next Fed meeting. For me, there is one. We're going to have boring markets for all eternity, or some unknown event's going to happen to make it.
Well, the answer is no, Uncle Mike. You have lost touch with the audience on this Uncle Mike special. 65.5% say they're all about the next CPI number. That's all they care about. So there you go. It's all about inflation. Then 20.7% say the next Fed meeting. So if you add those two together, over 85% are pretty much keying in on the Fed in some way, shape, or form. And then a tie for number 3, 6.9% each for the next earnings season. And then not much until election 2024. So got a bunch of inflation heads in the audience, Uncle Mike, which is interesting. By the way, it is Leap Day, so we thought we'd have a little fun, Mr. Uncle Mike, with a special Leap Day flash poll. Call it what you will out there. We said, in honor of Leap Day, how do you use leaps in your options trading? Gave you 3 choices and the infamous other. Stock substitution, or maybe a little bit of income, so some long-term covered calls or short puts. Or maybe you're going the other way, you're buying some long-term hedges with some long puts. Or you've got some other use case that we haven't mentioned here. Mr. Uncle Mike, first off, are you a big leap guy? I don't know. And then B, if so, what do you use them for? And then C, what's our audience up to?
I think I'm going to go in reverse order. I'm going to go C to A on this one, or at least start with C. I think our audience uses them for a stock substitution type of thing, in that they're, instead of buying a stock, they'll buy a call and then maybe sell some shorter term calls against it as like a covered call substitution type of thing. The way that I like to use them is I like them as a longer term hedge. Because of the fact that you can really set it and forget it. I had talked about on the show a couple weeks ago in one of the strategy blocks, in that right now you can look at high flying stocks that have more call buyers than put buyers, and you can actually set up near, not totally, well, maybe in some cases totally, near zero risk collars with potential of up to 10%, almost 10% upside. I like using them like that, and the main part of it where I use them is the longer term hedge. I think it's a great deal.
Look at you leap hedging. Interesting. Uncle Mike. New wrinkles to Uncle Mike's game all the time here. Always growing, always evolving is the uncle list of Mike's. Let's see what our audience is up to. I kind of thought it would be mostly stock substitution. That is the go-to use case we mostly encounter these things for. If I had to say in my use case what I've ever used a leap or just a longer term type option, it would probably be in the stock substitution realm. And that is the use case our audience is going for, Uncle Mike. 57.1% say they're all about the stock sub. Does that surprise you?
No, not at all. I think that's a very popular strategy in the trading world. And I've used it myself at times.
Actually, I lied. It just ticked up even more now. 62.5%. So they love themselves. They love themselves some stock substitution out there. The rest are all close to or around 12% each. So not a lot of love for the rest. We do have some write-ins, including Buddy Pariah Pants saying he likes to do some fig leafs, a.k.a. the Brian Overby special. Yeah, you're right. I guess for that, we'll put you down in the stock substitution category, because the fig leaf is really a stock substitution play. You're just doing a little bit of covered calls, quote unquote, against it. So there is an income component there too, but it's not really the main driver. The main driver is the stock sub. So we'll put you down for stock substitution as well. Maybe stock sub plus, Mr. Pariah Pants out there. But yeah, I can get down with a little bit of the old Overby special as well. Man, Uncle Mike, we're having a lot of fun here. We're almost running out of time. Man, Uncle Mike Palooza comes fast, comes hard, and then goes out with Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Uncle Mike, I'm kind of sad. I'm kind of deflated because I got all hyped for the Uncle Mike Palooza, and now it's coming to an end. I have to wait 4 years to do this again. In the meantime, sir, console me. Give me an awesome...
It's like the Olympics. It'll be worth it.
Give me an awesome Around the Block to hold me over for the next 4 years, sir.
Not much is happening. No, well, according to our audience, we got CPI coming up. So that's something to watch for. And just embrace the uncertainty. Embrace it by planning for it. And by planning for it, you can capitalize on it, hopefully, or protect yourself in one way, shape, or form. Embrace uncertainty. That is my Around the Block for today.
All right, listeners, unfortunately, that music means we've come, man, time flies. When you're Uncle Mike Palooza, I thought for sure it'd only be about halfway through the show by now, but man, we packed a lot of living into this Uncle Mike Palooza. Uncle Mike, did you have fun on your extra special Uncle Mike Extravaganza, sir?
I mean, it only comes once every 4 years. How can I not have fun?
Well, now you have time. You have 4 years to plan for the next one, to stock up, to maybe take a bit of a rest, take 2 years and hibernate, then come back and spend the next 2 years planning, and we'll be ready. 4 years, listeners. 2028. Oh, that's terrifying to say out loud. But there we go. The 2028 Uncle Mike Extravaganza. In the meantime, Mr. Uncle Mike, if folks didn't somehow get enough of you in this 1 hour long extravaganza, they need more Uncle Mike in their lives. Where should they go? What should they do?
Check out my website, stcharleswealth.com, if you'd like to talk with me one-on-one, set up an appointment, and follow me on Twitter, at Mike TOSAW, TOSAW, and let's make sure that we write to Mark in 4 years, because if February 29th is not on a Monday or a Thursday, I want a special edition, by gosh.
Oh, yeah. You're out of luck then. That's true. All of the universe collided today. It happened on a Thursday. The perfect synchronization. Can it possibly happen again in 4 years? Well, I guess you got to tune in 4 years to find out, listeners. In the meantime, they didn't want to intrude on Uncle Mike's extravaganza this week, but you know what? We'll give them some fun and some love anyway. If you want to check out what the Pit crew is up to, optionpit.com, you know where to go. And of course, you know where to go to get all the SIBO goodness, the Flow Masters. They got some cool stuff, trust me. We see it all over here, and they've got some really cool stuff. We just kind of scratched the surface of it here on the show here today. You want to see it for yourself? SIBO.com/RMA. Trust me, there's a reason why we've been using Trade Alert since the primordial ooze days of this network and the website. It kind of is a platform unto itself. If you're trading these options things, you owe it to yourself to at least kick the tires and light the fires. You can begin that journey, SIBO.com/RMA. Speaking of journeys, our option block journey has concluded, but you know what? Our network journey for the day has not concluded. If you're kind of hungover, you're a little sad with the Uncle Mike Palooza coming to an end, guess what? I got some good news for you. Coming up in a little bit, I'll be joined by none other than Dan the Grant Man, easy for me to say, by Dan the Man Gramza to hold court. Maybe we'll have a Dan Palooza, a Leap Day Palooza on TWIFE. I know you folks love Dan. He's the best. How can you not? So stay tuned for that coming up in a little bit. So that should hopefully put a smile on your face after the conclusion of our every 4 year Uncle Mike TOSAW extravaganza. Coming up tomorrow, of course, we got a little bit of Vol Views. Again, like I said, the Pit Boys on assignment, so who will be our special guests in the hot seat tomorrow? You got to tune in to find out. Should be fun. And then after that, who will be my special guest buddy on Options Oddities for your pro folks? Well, you got to tune into that to find out as well. Only one place to get that, theoptionsinsider.com/pro. Then we're back again on Monday with Uncle Mike and the rest of the crew for a little bit of the old option block. Stay safe out there, everybody.
The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.